Yo, yo, yo. Welcome back to the channel. It is time for a bear trap update on AMC stock. I'm so excited to be here and talking to you guys about this today because things are starting to look pretty good. So, if you're new to the channel, uh, make sure you subscribe, hit your notification bell, hit that like button in the comments, and watch all the way to the end so that we can dominate the YouTube algorithm. I appreciate you guys' support so far. If you want to follow me on Twitter, it's at David Marino Jr. I'll have a link in the description. And let's get right into it. So, every video I like to start off with AMC by drawing the long term trends that we have going on. And I think that actually I'm shifting to this sort of trend line where we have the initial rejection and then acceptance from the market above, and now maybe we're revisiting it as support, perhaps. And then the reason that I like it is because the channel that I've been talking about that we're trading in, it actually makes it a more parallel channel rather than one that's squeezing down. And perhaps this is healthy price action that we're receiving here on the bottom in order to make us have a more sustainable trend. If you consider like 500% pumps sustainable. But anyway, yeah. And so just for an example of what I'm talking about here, right? And if we were on the original bull trend that I was following before that we've broken since, you kind of have this eventually these 2 points are going to meet, and all trends are meant to be broken, right? Eventually this thing's going to go to the top or the bottom of this thing, this channel. But this sort of channel is much more sustainable rather than that, because once you have that kind of uptrend that's kind of peaking into a top resistance, it's going to cause a rising wedge, which is going to cause a big nasty breakdown, which no bulls want to see, right? So anyway, and by the way, I posted a couple other videos the past few days that are actually more evergreen and relevant. But let's get right into the bear trap. Sorry for the delay. I tend to talk a little bit too much. So anyway, if you haven't seen my other bear trap videos that kind of break down what I think is going on in AMC stock, I encourage you to at least check them out. But a brief breakdown of what's going on is we have this downward trend for bears, right? That's sending the price down. And then what I think is actually happening is that we're in an Elliott wave 2 currently. And so what that looks like is this is wave 1, which is a 5-wave sequence. It's a wave 1 flat. And if you really wanted to, you could draw it like this to just the bodies of the candles if you wanted to, right? But anyway, in a flat, wave 1 is pretty typical in Elliott wave. And also what you see with that is typically like a rising wedge pattern, which is what we ended up having in this scenario. And we broke that to the downside, which is fine because in Elliott wave, you kind of expect to have this, kind of like I drew here. You expect to have a 5-wave impulse up and then a 2-wave down, before a 3-wave up, and then a 4-wave down and a 5-wave up. And just for a quick example of that, I'm sorry that I keep saying that, but I just want to make sure everybody who's watching the video can kind of keep track of my my ideas as I'm going along, rather than just kind of assuming that you guys understand everything I'm saying. But an example of that on AMC, you could see here on the run up in June, we had a wave 1, a wave 2, a wave 3, which is usually the most powerful wave, a wave 4 down, and then a wave 5 up. And a cool way to measure these is using Fibonacci, which we're going to use here too. And just to prove that Fibonacci works here and pretty much everywhere else that you would ever trade a stock, I'll do a trend-based Fib extension from the bottom here before the run in January to the top of the run in January, and then the run down. And then you can see that the 0.3618 line here actually predicted the top in June before we ever even knew that there was going to be a run in June. And then also you could do a retracement. Sorry that I'm taking so long to get into the juicy stuff, but hopefully you appreciate that I'm just trying to make it easy for everybody to understand what's going on. And you can see that AMC respects these Fibonacci levels that work on every chart for every trade that you could possibly ever do for the till the beginning and the end of time so far in humanity. So yeah, let's get back into the wedge. So what I think is forming is we're in a wave two that's going to be of, and I'll do the Fibonacci's for this later, but we're in a wave two right now, which is a corrective wave down. And so far, what we've seen with the Fibonacci retracement, if you draw it, is that we have found support here in the golden pocket between the 0.618 and the 0.65, which are the $37.42 level and the $38.17 level, and give or take a few cents, whatever. I mean, you can see brief breaks below or above, and it still relatively is respecting the level. And so this, to me, seems like we're signaling a reversal as well. We have the falling wedge that I've been referring to a ton on Twitter and kind of has been my main thesis. And a falling wedge is a bullish pattern that typically will cause price reversal to the upside. And what that looks like here, and I'm on the hour chart right now, so that's why I'm being a little bit disrespectful of the price action, but because the daily chart is more important. As you go up in time frames, it becomes more and more relevant, the price action that you're seeing. So I think that this is the wedge that we're in. And so typically when you're dealing with a falling wedge, what you expect is a break up that is roughly the distance of the where the wedge like began, basically, or maybe you would measure it this way, whatever. It doesn't really matter that distance for the price target. What matters more is the general move that we may see as a result of this wedge. And so and I'll get a little bit more granular in a minute, but basically if you were to do a trend based fib extension, and this is what's so exciting about this, then you would do here, and then this is kind of the levels that you would expect if you were to get a break up out of this pattern. Just because there's more than just a price target, there's also momentum that plays a factor in this, right? Because we're in a larger trend, and the 1.618 is typically the most common kind of like, this is like the on a breakout what you would expect, and currently it's sitting at $76 now. You could, if we're in a less bullish run, you could see it kind of settle below here or anything like that. So don't like use this as gospel. And of course, nothing in this video is financial advice. I can't tell the future. I'm just doing analysis on the price and using tools and providing my opinion on what those tools are telling me. So please make your own financial decisions. So after each 5 wave count, sorry, I tend to get off track. I just really am passionate about this stuff. 2, 3, 4, 5, however you want to draw it. You get an ABC wave down, typically an Elliott wave for correction, and that's your wave 2. So A, B, C is how I'm currently counting it. And you can measure the retracement the same way. I kind of like where we're at with the 0.618 to 0.65, but let me tell you what I see playing out on the chart and what I think is going to be happening. So let's zoom in to a closer time frame. And technically on the hourly chart, we would have broken out of this wedge. Shit, you know what? Let me bring that bottom line back because I think it'll be important. Oh yeah, Control Z. I forget that works here sometimes. Let me make this white just so that. So this is that long-term trend that I drew earlier, okay? And I'll make it dotted so it's not as like pervasive. Okay. Or invasive. I don't know if that's the right word. Anyway. All right, so what I think is going to be playing out here, in my opinion, and you can draw it like this too if you want to. I mean, it's still a wedge, right? And what this signifies is that basically downward pressure is good from the top, but then it's slowly weakening from the bottom, which is signaling a reversal for bulls. What I'm expecting to see here is, in my opinion, we could break up from here, and that would be an ABCDE Oh shit, my bad. I drew it wrong. I drew it wrong. Drew it wrong. So that would be an A, B, C, D, E, and then you would have like a breakout there. What I think actually is going to end up happening is we're going to see a further correction here, but I think it's going to be a quick and dramatic correction. I think that we're going to test the bottom of this wedge one more time. So to paint a picture of what that might look like with the fib retracement in mind. And by the way, again, this isn't financial advice, and more so, this is more to teach people how to use these tools and be able to control their emotions in situations. If you're convicted in a play and you're analyzing it technically, it empowers you to be able to strengthen your conviction and understand the price action as it's happening as more of an emotional move than it is actually indicative of the value of the security or whatever that you're trading. So what I think is going to play out tomorrow is I think that we're going to see some drama. Bulls had a good day here, right? And we bounced right up out of this fib retracement level, just like I said we would. I'll just take this off. This is your bull trend. Well, I'm not going to take it off. You know what? I'm just going to change the color of it so that it's still here, but it's not like distracting or something. There you go. All right. So what I think we're going to see is one more breakdown. I think we will, and it's going to be highly emotional. People are going to be panicking. You're going to see like people who aren't as competent, or maybe aren't as loyal or to like the 8 movement type thing or whatever. And well, the people who are really loyal to the 8 movement, you'll hear them saying things like, I'm holding no matter what. The price today doesn't matter. I know the price, right? And then you're going to see people who are less experienced and maybe they're going to be a little bit more uneasy. It's going to look like this. And I've actually been calling for this. Boom. So this is what I think is going to happen. I think that you're going to see a pretty aggressive move down. It might not be that aggressive. I don't know. It could be. We've seen that before. But you're going to see an aggressive move down, I think. And it's going to break this key golden ratio that I talked about before, the 37.66 to 38.41, which is the 0.618 Fibonacci to 0.65 Fibonacci level. And that is going to kind of signal to bears that we have more downward action to go. But I think that this is what the trap is. I think that this is the ultimate like moment for the price to turn around, break below this long-term bull trend line that I drew earlier, right? Break below it, break below the key Fibonacci levels, the golden ratio. And I mean, it's going to be very emotional. Okay. This is what I think will happen. And look, it could break further below. And we could continue to the downside. I mean, that is totally a reality here. So you have to understand this. I cannot predict the future, right? But I think that this is the perfect signal for reversal for us to go into our wave 3 as a bull. This just looks like a reversal to me. And so on a larger scale, what that looks like is, sorry, let me do my trend base fib extension. Once we break back above, boom, there you go. Once we break back above, another thing that's going to happen is this really intense, and if you've been following the stock, I know you remember this day, this really intense level, which was our previous bull trend that I was charting, and pretty much everybody was charting on log scale. By the way, I use log scale if you're curious, because a lot of people comment they don't understand how my chart got, how I make the chart look like this. If you break back above this level, it's going to be like the ultimate signal, like, oh, we're continuing this aggressive year-long bull trend. We're going to continue, right? And so what's happening right now is basically bulls were like, oh man, it's going to go up forever. Yay, AMC's back on wave 1. And then on wave 2, they're starting to feel that despair. And I tweeted yesterday at, that I could feel the defeat, right? After yesterday's price action, let me show you the daily candles. I could feel that defeated kind of emotion coming out of everybody on Twitter, and like, oh, we'll get them next time. That sort of like energy, right? They weren't saying that, but that's kind of what was implied. And I said, be on the lookout for unusual whale action, right? And funny enough, I started seeing all these option chain notifications saying, "Oh, look, they got bullish price action on the options chain." I was like, "Yeah, you're gonna see that sort of thing when people start feeling despair in their position, like retail traders especially. That's when whales typically are the ones that are going to pick up the bill. They're going to start saying, "Okay, look, these options look pretty cheap, right?" And I talked about that in my original bull, bear trap trading thesis, which by the way, I've been calling for this bear trap. I mean, really, I was calling for downside when we were up here when I saw this star, but really, I've been calling for this bear trap since we were up here, and I think that we're still in play here. If you look, and somebody said on Twitter, they asked me, "Can a bear trap last this long?" And I said, "Well, absolutely, because what you're looking at is a bear trap on this white trend, which is such a long trend, right? So a bear trap on this is going to be much more emotional. It's going to be much more dragged out. It's not going to be this big like one swing down like a long ass wick and then you go back up. Excuse my language. I'm sorry. Um, but yeah, so that's what I see playing out basically. Another thing that I want to hold on. Let me make sure that I covered everything on that. Yeah. So anyway, I see more downside, and I see some emotion coming in the next day. What's today's date? Oh, it's Wednesday, right? So we got Thursday, Friday. Usually we get this weird, we get the options pinning or whatever. So Fridays have been like really not fun, where the price just kind of makes its move early in the morning and then just goes sideways the rest of the day. But yeah, so anyway, like I said on Twitter that I'm pumped for AMC. I'm excited. I think that we're on the precipice of a big move here to the upside. Um, we're gonna go into wave three, which is the most powerful wave. Oh, I forgot to do the extension and just detail what it's gonna look like. What I think it's gonna look like. So historically, like I said earlier, and thank you if you're still watching. I'm sorry that I kind of like jump all around and stuff. I hope that I'm easy to keep track of. I did just drink some coffee, so it's kind of got me buzzing a little bit. Like I said, the 3.618 extension actually predicted almost the exact top, and I think it actually was the exact top that it predicted. I just drew it kind of loosely here. So there are a few ways that you can look at where this breakout could end up occurring, but let's just do this for now. Let's say that this is one big move because Fibonacci works in this way. It works no matter how you kind of apply it. As long as you're applying it to a bottom, a top, and a bottom, you can pretty much get some levels that are going to be pretty relevant from a trading aspect. Like people are going to look at these and they're going to trade them. Example of that here, look. So all the way from here to here, and you can see that these levels are highly traded. This 382, you can see the price just jumping up and down below it. Boom, it breaks below. You have some fighting here at the 0.236. Boom, it breaks below. Finds support here at starts to find support at the zero, and then boom, finds resistance here at the 0.236 again. Breaks above, boom, it gets rejected. Like, which is pretty crazy. Like, how would you be able to predict that any other way? So anyway, this is what that sort of extension would look like. I mean, in my mind, and then also it's going to be pretty similar if I draw it from this bottom here. What I am envisioning happening, and again, I make Phonstradamus jokes on Twitter, but I may or may not. I can't tell the future. Okay, but what I see happening. Oh snap! That is not how I want to draw my waves. I'm sorry. Woo! I was about to get super bullish. So I see a 1, 2, and then I see a pretty aggressive move after we finish out this 2. Maybe you see it stop here at the the $95 level, retrace here, and then boom, maybe you see an extension here into this wave 5 that could get you. I think it might be, if it depends on where the 3 goes. Okay, if the 3 extends all the way up to the 1618, then really the 5 is going to be similar in size to the first wave from a percentage standpoint. And then you're going to see this wave 3 up, which is going to be the most aggressive and explosive wave, as I talked about before. So let me just make sure I get everything. I'm sorry that this video is getting a little bit long here. I didn't want it to be this long, but I just wanted to make sure that I'm covering all my bases for you guys. You guys can kind of see into my mind. For the ones who want to, you know, I mean, if you don't want to, that's fine too. Like, just don't watch my videos. Yeah. So, all right. And then I did want to talk about the similarity briefly that I noticed here. The similarity in the move. So, and this kind of goes into fractal theory, which I mean, I had that crazy live stream the other night and stuff like that. I don't know, how reliable that is or whatever, and it's not something I would build a trading thesis on, but like, you got to admit that this move here, right, does look similar to what could be playing out with this move here, right? And a very aggressive move down, and then you kind of curl up back up here, which kind of led back to this more aggressive breakdown and then break back up. So that's just something that I wanted to point out, and I'm going to do a more in-depth video where I actually analyze this part of the move here in late April, early May, and see how it compares to where we are now. And then also you could say that this candle right here is very similar to this candle right here on the daily chart. So maybe, if you were a fractal theory person, maybe you would say this is that move, and actually this is just a more long drawn out version. How do I change my highlighter color? So then theoretically, you could try and make the case that, and I'm not saying that this is the case, I'm just saying that maybe we're here and we're just in a more condensed, a more drawn out version of it or something. Or maybe it's not more drawn out. But yeah, anyway, I don't want to go too in depth on that. Like I said, I'm gonna make another video on that. And then one more thing. I don't want to make a whole video on this. This is an extra treat for all you guys who stayed till the end. Again, I appreciate you guys watching the videos to the end. That is like the best way to help in the YouTube algorithm, is to watch the videos all the way from the beginning to the end, to binge the content. That's the type of stuff that YouTube likes to see. But there is this magnet line, right? So let's remove everything else. There's this line that I noticed that tends to bring the price back to it with AMC. And I think it's here is where I drew it before. Yep. So, and this was actually the jump off, right? You got this nice long wick at the bottom of this one here, and it was the jump off. And so then you saw price come back, test around here, it jumps back up, comes back, tests around here, gets rejected, and then it just wants to follow it, right? Then it breaks back up. Look at where it finds some more trading action, right? Look at where it's going again. Could we see AMC wanting to move back up towards this again? Only time will tell. Thank you so much for watching the video all the way to the end if you stayed, man. I know that this was a long one. Make sure you check out the other recent videos that I made if you're trying to binge some AMC content. I did do a comparison of AMC's price action to Bitcoin's price action over the course of the year, where I kind of detail how price might be dumping in crypto and Bitcoin. And there's kind of a theory there that I'm kind of building up that maybe it's creating this liquidity transfer where they're actually dumping liquidity from crypto assets into certain stock assets, and then maybe they're just going back and forth to wash that liquidity and for whatever reason. And then also I have some weird similarity videos that are kind Kind of similar to this sort of trend line that you'd be looking at, but a little bit more in depth and a little bit more creepy. So go check those out that I posted in the past few days. And yeah, until next time, thank you so much for watching. This is a long one, 25 minutes, man. Oh shit, I feel bad, but I hope you enjoyed. Hope you feel like it was good time spent. And until next time, maybe I'll make another video tonight. I don't know. I got to go to the gym and stuff. But until next time, man, thank you for sticking around. Make sure you follow me on Twitter, and I'll talk to you next time. Thank you.